equity. I'm going to go over the quiz in just a moment. Remember, owner's equity is total assets minus total liabilities. So all you have to do is add the two types of assets, add the two entries on the right hand side, and that's subtract the second sum from the first sum. Am I right? So straightforward. Okay. You had a quiz also on the same thing. Number 2, what's the change in net working capital? The definition of net working capital: current assets minus current liabilities. Okay. So do this math. Current assets for say 2017 minus current liabilities for 2017. So subtract the liabilities from the assets, current assets. Okay, that's your net working capital for 2017. Find for 2018. So straightforward. Okay, number C. They purchased, you are told the company purchased. Generally we have to find, right? And what's the formula? This is the formula to find how much the firm invested in new assets. Okay, so what's the formula? Remember, it's a net capital spending formula. Go back to your notes, net capital spending. Okay, and what was it? It's a ending, remember, ending gross net fixed assets. Okay, so I'm just abbreviating it. Ending net fixed assets minus beginning. Ending means 2018. I could be repeating myself, again and again for no obvious reason to some of you. Minus beginning. Beginning will be 2017, 18, 17. Beginning net fixed assets, and then you add depreciation. Okay, add depreciation. Remember this, right? So this is the formula that tells you what was the spending in fixed assets. Okay. So this number will be different than the number given to you in Part C. In Part C, it says they actually, purchased assets worth $2,496. But this number is going to be different. Okay. So it says, and then the second part of how much in fixed assets did sell? So they must have sold some assets, because this should be the total amount invested in new fixed assets. But they say, hey, the number is 2496. So your answer using this is going to be different than the number provided in Part C. You see what I'm trying to tell you? The difference is what they must have sold. Does it make sense to you? Okay. The difference, between this answer and the number provided in Part C is something they must have sold. And then you have to find the free cash flow. So you know how to do it. The formulas are there, And yes.
The formula is there, but you can't, it was different from the balance sheet, in the PowerPoint.
What formula are you talking about?
Cash flow.
Okay, cash flow from assets.
I know how to do it. It's just that I couldn't just take the number from there.
Oh no, you have to find 3 values. So you have while answering Part A and B, you're ready to answer Part D, because some of the answers from your previous could be used here. So here, let me show you the formulas. Okay, so this is the formula. This is as I must have told you, you can answer this question by using the left-hand side. Okay? This is the left-hand side. So you have to answer this first, EBIT plus depreciation minus taxes minus this amount, and you have answered this, in Part B. Minus this amount, you have also answered this in Part B, I believe. That's Part C. You see what I'm saying here? So when you hit Part D, you have the intermediate answers. You have answers to some of these. You don't have the answer to this, so you have to use the number. So this minus this is your answer to free cash flows. This number minus this number minus this number is your answer, to Part C. All right, so D, for example, D, it's the same, it says cash flows to lenders, you know, so your formula, this is the formula for cash flows to lenders. The top formula, cash flows to creditors. This formula will give you a different answer than the number provided in Part D. So the difference between this and the number is the amount of debt they must have paid off. Does it make sense? Okay, so that's how you address it. All right, so what I want to do is go over the quiz very quickly. I returned it to you. Most of you did fine, but you know, of course, there are never 100% accurate answers from all of you, so I want to go over it. Your first test will be on the Wednesday of next week. Okay, so you have more than a week. It'll be on 3 chapters, 1, 2, and 3. Okay, and I'll provide you a brief review next Monday. So I'm gonna start chapter 3 in just a moment.
When's the test?
Next Wednesday.
So bring a Scantron, type B Scantron. So one more time, your first test is on the Wednesday of next week. All right, on 3 chapters. So part 1, I believe most of you got it right. So flat tax rate, so all you need to do is 21%. That amount is your taxes. Can anyone tell me what the answer is? The correct answer? 11,550 was your answer. I think most of you got it right, as far as I can recall.
For the first one?
Number 1. Okay, number 2. Now it says assume we don't have a flat tax rate. We have what we call a progressive tax rate. So now your income falls, your taxable income falls in this bracket, the second bracket. So you have to slice your taxable income into 2 parts, right? So the first part will be this part, $50,000. So $50,000 will be taxed at a different rate, which is 15%. So which will be $7,500. Okay? So the portion that falls in this, so what portion falls in this? The $5,000, because you have taxed on the first 50, your taxable income is 55K, so only $5,000 will be taxed at 25%, so your $5,000 is taxed at 25%. And is it 750 or what is it? 1250. 1250. And the total is how much? 8750. So your taxes under the progressive system turn out to be lower. It all depends, you know, what the brackets are, tax brackets are. Any questions on number 2? Okay, number 3. What's the owner's equity? Owner's equity, remember, net worth, stockholders' equity, shareholders' equity, owner's equity, one and the same thing. What's the formula? Total assets minus total liabilities. So what are total assets? Total assets, this plus this is 3 million. Where are total liabilities? This plus the total liabilities, 3 million. So 3 minus 3 is 0. So owner's equity is 0. This is what we call bankrupt firm. When owner's equity is 0, it means the firm is bankrupt. Okay, this is how we define bankruptcy. Any questions? Number 3. 0. The answer is 0. 3 million minus 3 million. Add the left hand side, add the right hand side, subtract the right hand side from the left hand side, that gives you 0. Okay, what's the above firm's net working capital? Net working capital is current assets minus current liabilities. So this is current assets, this is current liabilities. So 1 million minus 0 is 1 million. Net working capital. And finally, what's the number 5? Market value of equity. Okay. So previously that was the book value, owner's equity, book value. Now market value, current stock price times number of shares outstanding. So which is A is the correct answer. So many of you got full 10 points, some of you missed one, some of you.
No, it's C.
It's A, I'm sorry, yes. I'm sorry, yes. C is the correct answer.
C is number 5?
Number 5 is C, yes.
What was number 4?
Number 4 was 1 million. Was it 1 million? Yes.
What did you do to get that?
Current assets minus current liabilities. 1 million minus 0 equals 1 million. All right, any questions? Yes. All right, let's move on to chapter 3 then.